Newsfeed AM. Let's give you the markets update now. And Monday's trade starts off with sluggish local exchange. The markets are still dealing with the banking sector stress, even though the local bourse made gains of around 4% for the quarter. Gary Booysen is portfolio manager at Rand Swiss, joining us now for a quick markets update. Gary, good morning to you. Your quick overview of how the markets are faring in early trade after ending the first quarter firmer.
Yeah, so the optimism continues. Despite the global banking crisis, I think we're slowly starting to put that in our rearview mirror. We've got the financial index up 0.83% this morning. Industrial index lagging a little bit, that only up about 0.15%. Overall, the all-share index up about 1/3 of 1%. So definitely optimism feeding through. We have mixed Asian markets this morning. So we've got the Hang Seng down, call it 1/10 of 1%. But we just had such an optimistic move on the S&P 500 to close the quarter on Friday that I think some of that optimism is still feeding through. In the currency market, our currency is strengthening against the dollar. We're still sitting at around 17.88 to the US dollar at the moment. That after the Reserve Bank hiked interest rates by 50 basis points. So the carry trade definitely seeing a reversal, seeing some money flowing back into South Africa, hunting for that higher yield. Gold price is slightly down, but I suppose the big news story today really is the surprise announcement from OPEC, which has sent oil prices rocketing higher.
Yeah, well, let's stick with those commodity prices, those oil prices, surging by as much as 8%, hitting their strongest levels in a month. What's driving that trade?
Yeah, so it's interesting. It was actually a totally surprise announcement. OPEC Plus was supposed to be doing their digital meeting, and the day before the meeting, they announced that they would be cutting production by up to 1 million barrels per day. Well, it was just over 1 million barrels per day. Now, this, as they've cited the idea that the global banking crisis might sap some demand, but it definitely wrong-footed market participants that have been looking at China and expecting demand to be increasing, and really had priced in that OPEC Plus wouldn't move, that they would change their production. They wouldn't change their production guidance at the meeting. So definitely wrong-footed a lot of market participants. We've seen oil prices rocketing. It's driving up the likes of Sasol, which is trading at 250 Rand a share at the moment. That's up over 4%. And yeah, we can expect going into the end of the year with these output cuts that the oil market will be a little bit tighter. Brent crude oil now at about $83 per barrel. And that's obviously got huge ramifications for inflation. So just when you thought, if you look at the PCE numbers that came out in the US, which is the Fed's preferred gauge of inflation, that things might be moderating, higher oil prices suddenly almost throws a spanner into the machinery. And that could change the inflation outlook. That could change the path of interest rates. So definitely a big deal for financial markets this morning.
Yeah, let's take a look at what this week starts off with, and it is the South African Revenue Service, SARS, announcing the preliminary tax which was collected for the period 2022 to 2023, the financial year. Do you think that the markets are likely to be buoyed by the speculation that already the amount of money that's going to be announced is slightly higher than what was announced in February?
Yeah, so the expectation is for 93.7 billion, excess compared to the previous budget, about 10.3 billion compared to the mini budget. But this is, again, it's coming on the back of these higher commodity prices, which South Africa is a net beneficiary of. So our mining sector, just mining, tax on our mining sector accounts for about 30% of provisional corporate tax collection. So, the higher commodity prices really are benefiting our local tax collection, but they are expected to be temporary. So, when it gets announced, even if it is, in excess of what was originally forecast, I don't know if we're going to see a huge market reaction, because markets are, of course, forward-looking, and they're saying, if this isn't sustainable, what does this mean? And I suppose at the same time, it's also how will the additional money be spent? Will it be, deployed into an economy for the benefit of all, or will we see too much leakage due to graft and corruption? So I think that's maybe why markets will discount the figure, but let's more money for SARS is definitely good for South Africa.
Indeed, good news. All right, let's talk about the Absa Purchasing Managers Index, ticking down slightly in March to 48.1 from 48.8 in the month of February. What does that tell us about this data and in particular the health of the manufacturing sector?
So remember, the manufacturing sector, we've actually had a surprisingly resilient manufacturing sector given the operational environment in South Africa, with load shedding, etc. So a number above 50 shows manufacturing expansion, a number below 50 shows contraction. So our manufacturing sector last month showed contraction for the first time since September. This is now another period of contraction. We saw declines in all, the major sub-indices. And a lot of this has to do with the energy crisis that we're facing. It's very difficult to be a manufacturer when you have uncertain power supply.
Let's conclude the conversation with company news and Vodacom flagging taxation policies as a challenge to financial inclusion gains by the mobile money services. What's happening there?
Well, I suppose Vodacom is looking for softer regulation, specifically across Africa. They're looking for a lower tax rate on their product because, and I think that the arguments they're making are valid. If you look at the mobile money systems that Vodacom has developed, it's one of the biggest providers of them. The technology really does benefit the lower end consumer. Now, if the tax rates are high on that, the tax essentially falls directly onto that consumer base. If you're taxing every transaction through a mobile money, and essentially those transaction types are specifically designed to facilitate small payments, convenient payments of potentially unbanked customers, and you're really taxing the people that can least afford it and the people that are most in need of the support of the taxes. So you can clearly see where they're coming from, but it also, of course, will make Vodacom's product a little bit more attractive to their customer base.
Gary Booysen, thank you very much for that markets update. Portfolio manager at Rand Swiss.